I'm Michael Rivera, CEO of ACG Los Angeles, and welcome to the 2022 ACG Los Angeles Business Conference. I'm joined by Christian Schiller, Managing Director at Cascadia Capital. Christian, when we talk about the ACG Los Angeles Business Conference, what is it that brings you and Cascadia Capital back year after year?
Yeah, we think it's absolutely a must be at kind of conference for all of our industry bankers to efficiently meet all the private equity folks, especially. And then, for us as well, too, as we're building the markets and especially LA, to be able to meet all the channels, the lawyers, accountants, wealth managers, et cetera, and do that all in one very efficient setting. So we bring the whole platform.
You mentioned as you're coming down here into the LA market, and you talked about building. So talk a little bit about that, your role at Cascadia Capital, the efforts over the last year and a half here in Southern California, and indeed kind of around the country for Cascadia. What does the next 12, 24 months look like for you guys at the firm?
Yeah, so we're building and in growth mode aggressively. So Seattle's headquarters. We're in Los Angeles, Austin, Texas, Nashville, Minnesota, and then expanding in New York. And really looking to scale Southern Cal, especially, as well as Texas and Minneapolis and other markets as well too as an avenue of our growth. We just took on a minority round of capital that we're soon to execute here with Atlas Merchant out of New York and announce that. And so that capitalizes us for that growth in terms of hiring people at all levels, industry bankers and sub-vertical bankers to expand our business and that. And then that gets to, what we see is for the outlook is really that, we try to be entrepreneurial and there's always opportunity within growth, we believe. So we don't do turnarounds or underperforming businesses, but if we focus on growth and really kind of look at selecting the deal flow that we have to get those A minus assets, maybe a B plus, kind of at the lowest, that those are the kind of companies that really sell at great valuations in any market. And actually, through the great ACG connections here, I'm testing that theory with a lot of the equity firms, and they're still complaining about some pretty high prices and valuations in those A minus assets. And so that's kind of how we foresee it, is if you're in that sphere, there'll be a lot of growth and a lot of deal flow for the coming 12 to 18 months because of the capital supply demand imbalance. And but if you're not in that market, then we have to pass on those deals and stay away from that. So just navigating that kind of market to the right type of deals.
Yeah. So do you see that? Is it going to take a bit more discipline as we go? It would seem to me that we hear so much about recession and some of these challenges that there may be more distressed opportunities. There may be more kind of turnaround opportunities. Not tempting to get into that. You feel like there's enough quality of those A minus deals out there in the space. You're competing, you're getting those deals that you can stay there for the next 24 months.
Yeah, we think especially in an entrepreneurial business and our size, you can't be all things to all people. So, really we try to keep ourselves tight in a box and focus, and you are who you are and you're not or you're not. So, we're a growth bank working in lower middle market deals, and you just have to continue to find those avenues where you can fit that. And then we've gone down to a sub-vertical niche, which has been a key differentiator as well too. So like for tech, and for instance, we don't have a tech banker, we have a DevOps banker, we have a retail software banker, an HCM banker, a fintech banker, food and consumer. We don't have a general consumer food banker. We have a food ingredients banker, food contract manufacturing, branded food, et cetera. So we kind of see the market continuing to go down into those little sub-vertical niches and focus on where you really know your stuff, and then stay out of the stuff where you don't know it. Don't be a generalist banker.
Well, I would say on behalf of ACG Los Angeles, Christian, you guys have come in and had a really positive impact, not only in the Southern California middle market community, but for our ACG Los Angeles chapter. It's been great to get to know you. We've enjoyed your support, obviously, and I know we're working actively to get you and some of the senior bankers from Cascadia on our panels and our platform. So July 26th of 2023, we've got our State of Investment Banking, and we're going to have your CEO down here to feature him on the panel to talk about, again, not just the state of investment banking, but you mentioned that minority investment. That's a unique deal. And I think we were talking earlier, you said, was it 2001 was the last time something like that was structured? So yeah. I think it's exciting to explore your entry into the Southern California market, and as you've been able to grow and expand in this marketplace, but also that unique deal structure, right? Which may portend the way things could go for other firms, that type of thing. So we see with Cascadia kind of leadership kind of in different ways, right? And I think that's exciting to have your bankers as part of our community down here in Los Angeles.
Yeah, well, right back at you, and thank you. And ACG has been a great partner for us to grow our business and grow our markets, and you individually have been a great partner to help us out here in Southern Cal. So we're very appreciative and thankful.